TAD district, what you do is you issue bonds. You can issue bonds to finance the improvements, and then the way you pay for that is once let's say I've got a piece of property and it's worth $100,000. All the improvements I make to it now it's worth $300,000. The tax on $100,000 continues to go to the city and the county and the school board. The additional tax that I pay goes to pay off the bonds for the TADS, so it's all used within the district.
So the bond underwriter is going to look at the anticipated tax increase you get because of the TADS, right?
They only look at what's existing. So they're not going to write us a bond like they wouldn't write us a bond. Say everything goes through, they're not going to write us a bond on day one. They write a bond on the increases. So you have to have some investment. You have to take some initial money. Right, but that's right. But you have to get. It's a tool so that when the property begins to develop, we have some money. We have some money already to start the project. Once the development ensues, then that opens up to bonds, or you don't have to have bonds. You can also just use the money that goes into the fund. You can use it for improvements.
If the values don't increase,
if the values don't increase, then it's there. We have to pay for what?
Retirement of debt service, the debt service on file.
If we were to do that, but I mean,
that's how you issue bonds is on.
Well, that's right.
Anticipate increase in tax.
Absolutely, but we're not saying to do that.
Right. The values don't increase.
But you don't have to issue bonds in the TAD district.
Okay. You got to finance it somewhere, right? The improvements.
So the money goes in there. I mean, the money still goes into the pot. You can either use that money in the pot for improvements, or you can leverage the money because it comes in, but you don't do it until the increment's there. You can't do it on what you think the increment's going to be.
Where does the money come into the sinking pot?
The money comes in from the increased value. So there has to be some increased value. I know it. But what I'm saying is you're saying we're going to go get bonds without having it. You're not going to get a bond underwriter to do that. You have to have some increase.
That's how everybody else has done it.
No, you have increase, but you have to show the increase.
It's based on the income.
Right there. It's based on the income that comes in.